What's going up, Bull Runner? Welcome back to the channel. You are a genius for being here. We have an amazing video for you today. We got some amazing news we're going to be covering. We're going to be jumping into the charts. That daily signal, that daily indicator, we've been waiting for it to pop. It's getting close. We're going to double check on that in today's video. And at the end of this video, we're also going to show you how you can join the Bull Runners Club and make money with us every single week. Some top stories that you might not have saw last week. We're going to be jumping into these as well. Circle launches cross-chain USDC transfer protocol. Stablecoin payments, Visa shares plans for ambitious crypto product. Kraken asks San Francisco court to intervene against IRS demands. Metaverse division's $4 billion loss drags on positive first quarter for Meta. And last but not least, last week, Gary Gensler links crypto with cash in viral 2018 video. Crypto Twitter reacts. Plus, jumping into the XRP charts, we will be evaluating this as we talked about. We are looking for an explosion to the upside. Last week, we were talking about this for a very long time. It's coming. Lots of indicators are telling us it's coming. We also have been bouncing in this range, literally supply, demand, supply, demand, supply, demand for quite some time. This time, we got a little interference here. Good news for the bulls that maybe we just start that run to the upside. We can also see here, we're currently running into some extreme resistance at that magic white line that we talk about all the time. Can we break through that to the upside? We will be finding out today. Also in today's video, we're going to evaluate the market liberator indicator. We're going to evaluate the harmonics pattern that's going on and much, much more. But first, we're jumping over here to Twitter. This is where we're going to start the video off. And first and foremost, if you are not, please do so. Go over to Twitter and follow Win with Ryan at Real Win with Ryan, so you get all this information as it comes out. We're going to jump into today's bookmarks. May 1st. Hey, happy May 1st, by the way. It's exciting. We are moving into summer months coming very, very soon. Will the markets be pumping hot, or will the old saying of sell in May and go away be real this year? We're going to find out here very soon. May 5th, watch out, Cinco de Mayo, something may be exploding. Just keep a very close eye on what's going on in the market. So first and foremost, we're going to talk about today from Blockchain Daily, just in, reportedly Ripple and SEC to hold undisclosed meeting on May 8th, unconfirmed source, which is a whole bunch of horse manure, right? And then so as we see here, John Deaton also commented here saying, I am willing to bet this is false. The SEC lawyers and Ripple lawyers could meet anytime they want. I don't think that they would pick a date in a week from now just to leak it out. Digital asset investor also saying anyone can confirm. No one confirmed it. There was no official statement here. Let's go back and see. Looks like Blockchain Daily retweeted and quote tweeted out what John Deaton said. Blockchain Daily says here, to be clear, we did not make this up. It's circulating around Twitter, which is why we put reportedly an unconfirmed source. We agree with John's opinion that it seems unlikely, but we are leaving it for completeness. We continue to support XRP in the crypto communities. And this guy says, nope, SJ first, which is summary judgment. And if we remember, what are we waiting for? We're waiting for Annalisa Torres. Let's see if Hodl Monkey has given us a recent update on Annalisa's hair. Looks like he gave up back on April 26th. It was just getting too big and too much work. So there has not been, it's day number 13, making Judge Annalisa Torres' hair slightly bigger. There has not been a hair update since then, unfortunately, but always love those. So hopefully he'll come back in and she just has some absurd deal going on with her hair. It's very funny stuff. Back to the bookmarks, back to what's important. Now, as you know, we love to cover XRP and we love to cover cryptos, but we also cover the economy as a whole. And I like this tweet here. The real unemployment rate is closer to 6% because of the way the government manipulates the way it counts people not working. And this is the same thing for inflation, right? So if you've ever heard that statement that they're saying inflation right now is at about 5-something%, but in reality, it's double what they usually tell you. And it's, remember, that's government numbers. We all know that the government makes up whatever they want. Real household inflation is significantly higher and different. The fact that your eggs are higher, the fact that your gas is higher, that's real inflation. Well, this is even more scary because people are losing their jobs. So not only can you not afford food while working, now they're trying to crush the economy to where you cannot work because that is what brings inflation down. So fake job numbers about to get worse, says Peter St. Onge, PhD. Let's check out his little video here.
New numbers this week are expected to show the job situation is dropping fast, meaning that the millions of jobs the Fed is merrily butchering are not extra jobs lying around. Those are jobs people actually need. The other day I talked about how thousands of homeless encampments spreading across America are not actually counted as unemployed. Through the magic of government statistics, they are instead counted as, quote, out of the labor force. Statistically, they're retired. This is because government statistics, you'll be shocked to discover, minimize the number. They only count jobless people if they are actively looking for a job. That means if somebody is living permanently on government benefits or living in a tent strung out on fentanyl, they are not, as a rule, actively seeking a job. It turns out that is a lot of people, and it's rising fast. If we compare to the Trump-era trend, there are about 3.6 million missing American workers in the past 3 years alone. Where did they all go? Well, 2.5 million went on disability, which soared over the past 3 years, and the last million are simply not being counted. If we did count them, we'd be looking at an unemployment rate right now of about 6%, which is smack dab where we were at the start of the 2008 crisis. But the sugar-coated books are only half the story, because even with the bank crashes, we haven't even begun to feel what the Fed's economy-choking hikes will do to jobs. Now, it's well accepted that there's a big policy lag in rate hikes, meaning once you raise interest rates, it'll take something like 12 to 18 months for the effects to hit the economy. In fact, the Fed's epic round of rate hikes started in April of 2022, so that's exactly 12 months ago, but they didn't really start biting until about October, which is 6 months ago, meaning we have barely begun to feel the first light breezes of what could be, going by the credit crunch, one heck of a storm. And that's where the new jobs numbers come in, because they're saying that light breeze is already toppling buildings, starting with job openings. Now, a year ago, there were 12 million job openings in America, which is about 3.5 million above trend. That was back when nobody wanted to work, so McDonald's was offering 15 or 20 bucks an hour. Those days are now long gone. Tuesday's numbers are expected to show just 1 million above trend, so we've burned off 2/3 of the so-called surplus jobs before the rates even hit. Meanwhile, pain is coming from the other side of the anvil. According to one layoff tracker focused on tech, companies have, quote, slashed more than 170,000 jobs in the past 4 months. That's compared to 15,000 jobs cut in 2021. So we could be in for a whole lot more pain in jobs, suggesting that the Fed's current strategy of sacrificing jobs to hide the inflation it created is going to backfire. In fact, it could lead to stagflation, this time combined not with $20 McDonald's jobs, but with millions of jobless desperate to make ends meet. Okay, we'll be watching. See you next time.
So the interesting thing is, the United States is becoming a gig economy, they call it anyway. So the reality is, do you have a side gig? If you do not have a side gig, you can actually go in the description down below. Join the Bull Runners Club for free. We are teaching people how to become successful affiliate marketers, where you can actually make money every single week with us. And you won't have to worry about finding yourself an emergency side gig if things get bad and this economy hits you and these job losses hits you. You will already have an established and growing brand new business. So click that link down below, get started with us. We're here to help you out. Also, just in, check this out. Syria calls to abandon the US dollar for global transactions and adopt the Chinese yuan. So if you guys are not familiar, haven't been paying attention, the BRICS nations continue to grow. More and more nations are continuing to join them. Do you know why? Because they want to work as a team, as they say. The United States wants to be a dictator. It wants to be the bully on the block that goes in and just destroys everybody, because we have a big giant military. So we would just knock people upside the head with a big giant stick. Well, now the other world powers are starting to join together, and they're letting the smaller teams join them as well. So this is actually very crazy. Just in, Syria calls to abandon the US dollar for global transactions and adopt the Chinese yuan. So hopefully this can stop the war. So there's one of two things that can happen here. One, this can bring peace, where there's other countries out there that are willing to stand up against the bully of the United States, or it could cause World War III and everyone just drops giant nuclear bombs on each other, and then nuclear fallout happens, and we're living underground in bunkers. So who knows which way it's going to go, but I'm hoping that peace is the way that it goes. Also, just in, U.S. Treasury says that the country's banking system is sound and resilient after regulators seized First Republic Bank and sold it to JP Morgan. So I can't, I don't know, like, what are these people doing? The U.S. Treasury says it's sound and resilient. A bank just crashed. This is the third very large bank that just crashed, and they're saying that everything is okay. Not to mention the Federal Reserve is potentially about to rate hike again. So we got banks failing, we have economy crashing, jobs about to be lost more, and we also have the Federal Reserve that's probably going to hike rates again. So how many of you guys are signing up for citizenship in other countries, right? I mean, this is absolutely crazy what's going on, and we're seeing it in real time because nowadays it's on the writing is on the walls. We are literally watching it happen through Twitter. Now, a lot of the news organizations are scared to actually put it out there, the truth. However, the Twitter is where you can find it all. So also really interesting here, the digital asset investor Twitter, he has a great feed as well. So go check him out. This was crazy though. Why has Ethereum been completely left alone while the SEC sued Ripple and tied them in court for over 2 years? It's not SEC versus Ripple. It's the SEC and ETH versus Ripple XRP, and always has been. The ETH founders and their disguised ICO whales wouldn't hold up for a month in a US or in a SEC lawsuit, and they all know it. And if you're not aware, we've been talking about this, it's called ETHgate. The ICO, the initial coin offering, there were some very prominent people higher up in the governments, the elites, who were allowed to buy Ethereum for very little. And they want that to be the winner, right? They don't want XRP to win because then they don't become mega quadrillionaires. They're already 100 millionaires or potentially even billionaires because they bought it at $1, right? So it's crazy how low. Some of them even got even lower than that. But anyway, let's check out this video and find out what's going on here. All right, and part of the audio is a little staticky, so for those of you wearing headphones, just prepare, but here we go.
Let me start by saying I think it's great for the blockchain and crypto industry to have players like JPM leaning in. Thumbs up, That's great. That's the only nice thing I'm gonna say about this.
You mentioned Jamie Dimon, so let's bring it back to Jamie and JP Morgan. What do you think is gonna be the thing that they will have to change the most or lose market share and somebody else is going to do better, faster, serve their clients better than JP Morgan or Goldman Sachs?
You can just hear the bankers panicking right now.
But what
feel the panic in their voices.
Okay, so I got asked this last week. I was speaking at a Morgan Stanley conference, and somebody asked me, there was this set of headlines about, about the JPM coin.
Right. Our company Consensus has been very prominent since the start of the Ethereum ecosystem. I can attest that JP Morgan was there right from the start before public mainnet was even launched.
This guy was from Morgan Stanley who was interviewing me. I said, so is Morgan Stanley going to use the JPM coin? And he's like, well, probably not, And so, well, is Citi going to use the JPM coin? Is B of A going to use the JPM coin? Is PNC? And the answer is no.
So Consensus has been working with JP Morgan for quite a long time, more recently, to discuss how we might work together more intimately. And so
does that mean we're all going to have these different coins? And does that mean like we're back to where we are, where there's lack of interoperability? So like, what? I don't get it.
The Quorum team is heavily engaged with us for at least a year to facilitate transition, and we're working together on a shared roadmap that we've defined and will continue to define together.
One more quick thing on JPM coin. So let's think about this. The JPM coin, they announced for institutional customers, if you give them $1 in deposits, they'll give you a JPM coin that you then can move within the JPM ledger. Wait a minute, just use the $1.
Right. JP Morgan started paying attention to Ethereum blockchain technology even before public mainnet was released. So they started experimenting and building out some things when we were still building proofs of concept.
Well, I really don't understand. Like, If you're just moving it within the JPM ledger, and it has to be dollar to dollar, a one-to-one backing, it honestly doesn't actually, I don't understand what problem that solves.
They had a handful of different teams that focused on blockchain technology, and we've interacted with them roughly from the start. We started to interact with them in a really concerted way around the time of the advent of the Enterprise Ethereum Alliance. So we were two of the major drivers of that initiative and have been two of the major drivers of activity inside the EEA since launch, really.
Now, back to my first answer. Look, if it solves the problem of JPM being associated as they're leaning into crypto, yay. That's all I got.
It's after the press planting. They plant the press stories. They put out lawsuits. They create as much of a fuss as possible. They try to get their government friends involved. And then they go, oh, God, this thing's happening.
All right. So as we can see, interesting, right? So very interesting there. And I love this comment here. Corruption within the government and its agencies. Too many compromised, freeloading public servants. Drain the swamp. Public execute. Oh, that's a little deep there. Ethereum has stupid, ridiculous fees. Banks thrive on fees. XRP is almost zero fees. Guess which one bankers will approve working with and which one they're afraid of. And I agree, right? So we've talked about that stuff at length here. And just in the crypto space in general, the crypto space is for the people, but the banks are not for the people. They're for profits. We know that. So, but he went on to quote tweet his own tweet here. He said, "It's really genius what the government did if you think about it. Convince everyone Bitcoin is a libertarian movement to suck them in. Yell decentralized from the rooftops about Ethereum when you know it's controlled by the disguised whales from the ICO, which seems to be JP Morgan here, guys. And then they cherry pick on top, or the cherry on top is to get all your pundits and media friends to point at XRP and call it the banker's coin. So deflection, if you've ever seen it before." All right, great. And let's go ahead and run through what happened last week. Circle launches cross-chain USDC transfer protocol. So Circle launched a cross-chain protocol that enables USDC transfers between the Ethereum and the Avalanche blockchains. The protocol works by burning the selected amount of native USDC on the source chain and then minting an equivalent amount of the new USDC on the intended destination chain. The protocol essentially makes USDC transfers between the two networks faster and more user-friendly as prior to its launch. Or, you know what you could do is use XRP, cross-chain, right? So people had to use third-party bridges or a Circle partner to facilitate transfers between the two networks. Additional support for Solana and other blockchains will be added later in 2023. Now, I wasn't kidding there, though. This sounds like they're trying to do what XRP does, but, you know, obviously there's other companies out there that want to be a competitor. So, and Circle, of course, is USDC. And they've got to, they've got to stay relevant. Stablecoin payments. Visa shares plans for ambitious crypto product. Coy Sheffield, the head of crypto at Visa, announced a new cryptocurrency-related project on April 24th focused on stablecoin payments. Details are sparse at this stage. However, Sheffield shared a job listing relating to the project, with the description noting that the Visa crypto team is building the next generation of products to facilitate commerce in everyone's digital and mobile lives. The job listing is seeking candidates with a good understanding of layer 1 and layer 2 solutions, alongside experience with writing smart contracts using the programming language Solidity, among other things. Kraken asked San Francisco court to intervene against IRS demands. Crypto exchange Kraken has fought back against the U.S. Internal Revenue Service over what it feels is unjustified treasure hunt for users trading info. According to court documents, the firm requested a federal court in San Francisco to intervene and asked the IRS to back off. The IRS issued a summons in February demanding additional information on Kraken users who traded $20,000 or more in any single year from 2016 to 2020. So the IRS is coming for you, ladies and gentlemen. Make sure you're smart and make sure you track and actually do your taxes properly. Metaverse Division's $4 billion loss, Metaverse Division's $4 billion loss drags on positive first quarter for Meta. So Meta disclosed its Q1 earnings report that its Metaverse unit, Reality Labs, posted a loss of $4 billion during the quarter in what has been a costly venture for the firm. The $4 billion loss adds to the $14 billion Reality Labs loss over the entirety of 2022. Still, Meta posted a profit totaling $5.7 billion in Q1 overall. With the firm's work on artificial intelligence somewhat curbing the losses, Mark Zuckerberg was also not fazed by the loss from Reality Labs, as he reiterated that we continue to expect Reality Labs operating losses to increase year over year in 2023 as the firm eyes growth in the long term. Gary Gensler links crypto with cash in viral 2018 video, Crypto Twitter Reacts. And we actually showed this video. So very important information. Go back and watch our videos. If you're not subscribed, click subscribe, watch every day so that way you're up to date. Viral clips of Securities and Exchange Commissioner Gary Gensler circulating this week, showing him take a highly contradictory stance on crypto compared to what he holds now. As it stands, Gensler thinks almost every crypto asset apart from BTC is a security, and he has pushed hard to regulate the crypto sector from that viewpoint. However, in a snippet from one of his Blockchain on Money lectures from 2018, while he was working as a professor at MIT, Gensler said, 3/4 of the market is non-securities. It's just a commodity, cash, crypto. He even suggested Ether was not a security, despite repeatedly suggesting otherwise over the past couple of years. And that was because the ICO information stuff that I just came out with earlier, right? So back in the day, he was all about it. Now he's not. And what's interesting, he recently said he's never even used crypto, not one crypto ever. But he taught an entire class on it. Interesting. All right, guys, so let's go ahead and jump into the charts here. XRP on the daily, here we are. So let's go ahead and go back to the weekly chart first. So we've been covering this a lot. Very exciting potential here for a harmonic pattern to play out. Unfortunately, once this harmonic pattern gets to this level, which it's saying is going to get to $1.61, it's going to be a potential reversal zone, meaning it gets bearish when it gets to $1.61. So we'll see. But one thing that's very exciting on this smaller time frame here, we do have a bullish buy signal from Meta or from Market Liberator A. And again, this is not financial advice. Do not buy or sell anything because we talk about on this channel. In fact, it's never actually had a weekly call play out recently. Okay. So right now it is showing that it is in a buy. It did hit a safe. Actually, why does that say none? Because it actually has hit some of these in the past. But anyway, right now it's looking to play out to 67 cents. It did hit its first level of take profit here at 58 cents, then retraced. Now it's potentially on its way back up. And in fact, if we go ahead and go from the swing low to the swing high here, you can see price came back down and tapped right off that 618, the golden pocket, boom. And we may see the rise there, which will be really interesting to watch and follow. Our daily is also flipped bullish now. So our daily charts are also showing us we have a long entry here. And with this indicator, the Market Liberator indicator, a lot, and I mean a lot of times, you'll see the indicator flash a buy, and it does come back and retest that zone and take off. And you can see we have some supply and demand zones here on these. These are on the 1 minute time frames. These are ones that we picked out a while ago. You can see it came and slashed through all of those. So liquidating anybody that went long here, came down, liquidated those. Now it's starting to make its move to the upside. This Market Liberator indicator is showing a take profit level of 53 cents to the upside. It also has a harmonic pattern ready to play out. Potential C, this one's at 55 cents. Then we'll get bearish. But remember, that's how the markets work. They pump to the upside. They pump to the downside. I love seeing in the comment section, oh my gosh, why do you say that the market can go up and it can go down? Because that's what it does, ladies and gentlemen. Markets go up and they go down. In fact, they go on the way up. They often come back down. And that's what's called a pullback. So we are still watching for this to continue to move to the upside. On our daily chart for the non-perpetual contracts, we're looking for price to get back to this level. On my personal opinion, where we're going 51 cents to the magic white line, And if you're interested in the magic white line, I had someone reach out about that the other day. Shoot me a message over on Twitter. I can get you in contact with the system owner and they can get you that magic white line. But it has been amazing. I mean, look at this on the minute. So on the 1 minute chart, it was telling us, let's go to perpetual so it's cleaner, that there was the 1 minute magic white line. It went up, broke through. So this is bullish here. So let's hope we can continue. The next move to the upside would be the 5 minute magic white line. And that puts us at 46 cents, which this is important to keep track of right here, because what are we looking for? We're still waiting for the daily move to play out. Remember, we break above the 50 exponential moving average, and we break above the 14 exponential moving average. Now, here's what's interesting, guys. We got up, boom, we broke through the 50, and then boom, we broke through the 14, and look what happened. We rejected. Now let's go for that second attempt. So this was attempt number 1. Now we're going for attempt number 2. Will we make it? We have to break and close a bodied candle above this 14 exponential moving average, in my personal opinion, to give me more confidence in that. So let's see if we can make the run to the upside. We continue over and over and over to reject off of this supply and demand zone here. Look at once, twice, 3, 4, 5 days in a row, or not 5 days, but 5 attempts in a row. We are currently on our 3rd day winning or losing streak here. Red candles, 3-day losing candles. We have 1 hour and 6 minutes left in this candle. Will it battle back to get back above the 50 exponential moving average here of 0.4672? Interestingly enough, that is where our 5 minute magic white line is. So will it battle back to there and then continue its surge to the upside? Like I said a couple of days ago, it could be happening within 2, 3, 4 days, and we're getting close. That was actually 2 days ago. So we have 2 more days, in my personal opinion, that hopefully we should see that move to the upside. However, if we do drop to the downside, we have this nice little landing pad here, which is at 44 cents, 45 cents. And then if for some crazy reason it breaks through there, then we might be getting back to that 42 cent range. So that's the ups and the downs that could be coming. Let's go look at Bitcoin. So here we have Bitcoin, a massive daily down move, 4.2%, down 420. Check that out. Right now, it did reject off of this level here, which is at 27,896, the white line, rejected, but it also is staying bullish above the daily 50 exponential moving average. So jumping to the 4-hour charts here, we could very likely see a rebound here on this 4-hour surge. It would have to break above the 50 exponential moving average. So if we see that, if it breaks above the 50 exponential moving average, we may then also have a daily rebound also. And taking a look here at Ethereum, Ethereum's in the same scenario here as XRP, in my opinion. If it gets down here, closes below the 50 exponential moving average, we could see a nice run to the upside from Ethereum coming here soon in the next day or 2 or 3 as well. The charts are showing that, but it does have to consolidate here for a little bit and get under this 50 exponential moving average, build up some purchase orders, and then shoot back to the